Mike Reid from Frog Capital. What were some of the standout deals for you over the last 12 months?
Hi, Denise. Well, we've had a really good run. We've had three profitable exits in the last 12 months. So I'll just pick out two of those. One was a very successful e-commerce SaaS analytics company that we helped grow into the US that got acquired earlier in the year. And we made a 3.2x on that deal. And then at the end of Q1, we completed the sale of a gaming and digital entertainment software and IP business and grew that business again very internationally and made a very nice 7.4x on that. Two new deals, one a health and safety SaaS business we closed in Q1, which I'm really excited by. Again, grown into Chicago from the UK, and what a great time for that company. And then we were actually just announced our second deal in our latest fund, which is a employee remote worker sentiment tool, which is exploding and doing a really nice job, HQ'd in Sweden and coming to the rest of Europe and US.
And I know that you announced a first close of your new fund earlier this year. What was fundraising like? Presumably there was appetite.
Yeah, I think, I mean, as you know, we specialize in software growth equity. So I've noticed a couple of themes. One is oversupply of money into the buyout area. Buyouts has been a very successful market for returns, but it is now experiencing an oversupply of capital, and that plus I think a high leverage approach to keep returns up there is putting off investors. And then early stage VC is clearly attracting quite a lot of interest, but a lot of people have long memories. It's a very volatile area, early stage. So growth equity, personally for my own money, but also for a lot of the LPs we've been talking about, is a really good compromise of getting an increase in profile to software, but in a slightly more resilient way.
And as the pandemic spread, there was a lot of talk about portfolio companies needing emergency liquidity for various reasons. What was your experience?
So I've been in this industry long enough to remember the dot-com crisis, and that was an absolute bloodbath. And that's obviously percolated into my memory in a big way, because I'm absolutely delighted that we have had and will have zero emergency fundings this year in our portfolio, again reaffirming the kind of growth equity strategy done well. So for us, I think we were focusing on new deals and growth, which is obviously a pleasure.
And has the way that you monitor your companies changed over the last few months? And do you think any of the practices that you've incorporated will live on into your everyday working life?
Yes, so this is an area I've been working on for 10 years now, since I launched Frog. Even before the crisis, we had a triple approach to portfolio monitoring. Obviously, one is through the deal lead being on the board, but we have a CFO, portfolio manager, head of portfolio that talks to the financial controllers and CFOs every month. And then in addition to that, we have an operating partner group which helps businesses with particular challenges like sales and marketing or technology development, engineering, growth, etc. So we've had quite a lot of interaction, which I think is fundamental again for growth equity. Through the COVID crisis, obviously a lot more focus and thinking around path to profitability. And again, that seeps into more detail, more planning around budgeting and forecasting around that side of things. So probably more, it was there already, but more focus on that side.
Mike Reid from Frog Capital, thanks very much.
Thank you.